Welcome back to the deep dive. We have got something really interesting on the desk today.
Yeah, this is a bit different for us.
It is. Usually when we talk about financial markets, it's all about charts and gut feelings. But today, we're going to the other side of the screen.
We are looking under the hood,
Exactly. At algorithmic trading.
which is a topic that I think it usually scares people off instantly.
It really does. It feels like black magic to the uninitiated. But we've got a stack of manuals here, and I mean dense, comprehensive technical docs for the Aurum series of trading bots.
Mm-hmm.
And the first thing that hits you when you actually read them is that we are not talking about crystal balls here.
No, not at all. And that is probably the biggest misconception we need to clear up right away.
Right.
People download these things thinking they're getting a money printer, something you just switch on and forget.
Yeah.
But when you actually look at the source material, these 5 different manuals, what you're really looking at is, well, it's codified personality.
Codified personality. I like that.
It's just strict logic. A set of rules that never gets tired, never gets hungry, and most importantly, never gets emotional.
And that is the mission for this deep dive. We aren't just going to list features like we're reading off a product catalog.
Mm-hmm.
We want to decode the philosophy behind these bots. We want to understand how they think, how they manage chaos when the market goes sideways, and honestly, how they stop you from losing all your money.
Exactly. Because if you look at the code references in these documents, the sophistication isn't just in knowing when to buy.
It's in knowing when to stop.
It's in knowing when to stop.
Right. So we're looking at a whole spectrum here, 5 systems. The K2 Pro, Gold Pulse Pro 5, K2 AI v3.0, Eurostrike Pro 5, and the Yen Vector.
It's a fascinating evolution of logic.
It is. They range from what the manuals call beginner trend followers,
Mm-hmm.
all the way to, well, institutional systems that literally claim to learn from their own mistakes.
Yeah, we'll get into whether that's true or not.
So if you're listening and you want to understand what's actually happening in those milliseconds before a trade executes,
Mm-hmm.
if you want to move beyond buy low, sell high,
Yeah.
and get into things like volatility filters, adaptive grids, portfolio governors, you're in the right place.
Let's do it.
So let's start with the comparison table lists as the most approachable, the Aurum K2 Pro.
The K2 Pro is the perfect place to start. It really represents the sniper philosophy.
Sniper. So that implies it's waiting a lot.
A lot. It's not spraying bullets.
Okay.
The manual is explicit. This is a trend follower. And it states very clearly that it does not use grids and it does not use martingale.
Okay, can we pause right there for a second? Martingale is a term that gets thrown around a lot in bot circles, usually with like a grimace.
For good reason.
Can you define that for anyone who might be new to this?
Sure. Martingale is it's a super high-risk betting strategy. It actually comes from like 18th century France.
Oh, wow.
The idea is if you lose a bet, you double the size of your next one. So you lose $10, you bet 20.
And if you win, you make back the 10 you lost, plus
Right.
the profit,
Exactly. It sounds mathematically sound.
until you run out of money.
Precisely. It works great until you hit a losing streak, and suddenly you're betting the GDP of a small country just to win back $10. It blows up accounts.
So the K2 Pro manual says no to that.
Explicitly forbids it. One trade at a time, fixed risk.
That's rare. Usually bots love to double down to hide their mistakes, but the K2 Pro just takes the loss.
It does.
What I loved about this manual was the 3-tiered entry logic. It felt less like computer code and more like a pilot's pre-flight checklist.
It is a checklist, and for a trader, this is the aha moment about patience. It has to satisfy 3 totally distinct conditions before it even thinks about pulling the trigger.
So what's tier 1?
Tier 1 is the trend filter. It uses dual exponential moving averages, or EMAs.
That's the fast 50 and the slow 200, right?
Correct. And an EMA is just a weighted average price. The rule here is binary and brutally simple. The fast line must be physically above the slow line to even consider a buy.
And if it's not?
The bot is deaf to buy signals. It just sits on its hands.
Okay, so step 1. Are we generally going up? Simple enough. But tier 2 is where it gets interesting. The manual talks about a volatility filter using Bollinger Bands.
Right. This is the rubber band effect.
Okay?
Bollinger Bands measure how stretched the price is. The K2 Pro waits for the price to actually touch the lower Bollinger Band during an uptrend.
So it's waiting for a dip. It's waiting for a sale.
Exactly. It wants a discount. It's looking for that moment where the rubber band is stretched to the downside, implying it's about to snap back up.
Right.
It refuses to buy at the top of a candle when everyone else is, FOMOing in.
But just buying because it touched a band is dangerous, isn't it? That's what traders call catching a falling knife.
It is. Just because it dipped doesn't mean it's done dipping.
Right.
And that is why Tier 3 exists. This is the momentum trigger. It uses the parabolic SAR.
SAR, stop and reverse. Those are the little dots you see in a chart, right?
That's the one. So picture this. The trend is up. That's Tier 1. The price is pulled back to the lower band, Tier 2. But the bot still waits. It waits for that parabolic SAR dot to physically flip from being above the price to being below it.
And that flip is the final confirmation.
That's the signal. It's the mathematical confirmation that momentum has shifted back in the direction of the trend. Only then does it fire.
Trend, pullback, trigger. That's incredibly disciplined.
It is.
And looking at the risk profile section, it seems just as strict on the exit.
Oh, it's ruthless. It uses a fixed risk approach with a default stop loss of just 9 pips.
9 pips. That is tiny.
It's microscopic in the Forex world, but the philosophy is, I'm a sniper. If I'm right, the market should move immediately. If I'm wrong, I want out now.
No hope, no praying.
None. And there's a fascinating technical detail in the manual about ECN compatibility on this.
Oh, the order send thing. I saw that code snippet, but didn't really get why it was necessary.
So it's a workaround for real-world broker infrastructure. Some brokers, ECN brokers, they don't let you set a stop loss at the exact same millisecond you open a market order.
The order just gets rejected.
It gets rejected. So the bot has to kind of trick the system.
Ow.
The K2 Pro code sends the buy order with 0 stop loss first. It gets the fill. Then, milliseconds later, it executes an order modify command to slap that protection onto the open trade.
That's brilliant. It shows the code has to deal with the real world, not just theory.
Exactly.
Okay, so K2 Pro is our disciplined sniper. Waits, fires, cuts the trade if it goes wrong. Let's pivot to something completely different.
The polar opposite, almost.
Let's talk about the Aurum Eurostrike Pro 5. The manual calls this a self-learning system. Now, be honest, is this just marketing fluff, or is it actually learning?
It's surprisingly legitimate, though, we shouldn't confuse it with ChatGPT-style AI. This is where things get a bit sci-fi for a MetaTrader bot.
Okay.
The Eurostrike is a grid system, so unlike the Sniper, this one builds a position.
Right, if a price moves against it, it buys more to average down.
Correct. But the core innovation is that it uses MetaTrader 4's global variables to remember past outcomes.
Remember, as in, it knows if it won or lost the last series of trades.
Yes. It stores data on your hard drive that persists even if you restart the computer. The manual details a function called adaptive learning.
Okay, so what does that do?
Let's say the bot wins a trade series quickly. It updates a variable called learned spacing factor. It effectively says, hey, the market is pretty easy right now.
So it gets more aggressive.
It tightens the grid. It decreases the spacing between trades to make money faster. It gets confident.
But what if it loses?
Or what if the trade just drags on for days in a choppy market? The function sees that struggle. Next time, it increases the spacing, widens the grid, and pushes the take-profit targets further out.
It gets cautious.
It plays defense. It is constantly tweaking its own parameters based on its recent track record.
That is fascinating. Adapting its aggression based on recent pain or pleasure.
That's a good way to put it.
But there was another feature in the Eurostrike manual that sounded intense. Hedge mode.
Ah, yeah. This is its ultimate defensive mechanism. Most grid bots have a fatal flaw. If the price keeps falling, they just keep buying.
Until the account hits 0.
Yep. The Eurostrike has something called a hedge trigger. If the market goes against the bot too hard, say, it's bought 5 times and the price is still dropping like a stone.
Yeah.
It stops acting like a grid. It flips a switch and starts opening trades in the opposite direction.
Wait, so it bets against itself?
In a way, yes. It creates a synthetic hedge. By selling while it's holding buys, it locks in the drawdown. The loss stops growing.
It freezes the bleeding.
Exactly. It buys the account time to breathe. Then it waits for a specific market condition to unwind the whole mess. It's complex, but it prevents the account from blowing up in a flash crash.
And on top of that, I noticed it has a session filter.
Yes, session allowed. It only trades during high liquidity windows, London and New York sessions.
So it understands when to trade is as important as how.
It avoids the dead zones, like the late Asian session, where movement is often just unpredictable noise.
Okay, so we have the sniper and the learner. Let's talk about the specialists, because the manuals make it really clear. You can't trade gold the same way you trade the euro.
No, you definitely can't. Gold is a different beast entirely. And that brings us to the Aurum Gold Pulse Pro 5. This is a bot built specifically for XAUSD,
Gold is just. It's pure volatility. It moves fast, it moves hard.
which is why Gold Pulse is a scalper on the 5-minute time frame. But here's the really smart part. It uses dynamic spacing based on ATR.
Break that down. What's ATR and why does the grid need it?
ATR is average true range. It just measures volatility, how big the candles are.
Okay.
Now, imagine a normal grid where you buy every 10 pips. But if gold is going crazy and moving 50 pips in a minute, a 10-pip grid is useless.
You have 5 trades open in 60 seconds and be massively overexposed.
You'll catch the falling knife with your face.
Okay.
The Gold Pulse Pro measures the volatility in real time. If the ATR is high, the market is wild, so it automatically widens the grid. Maybe it spaces trades 50 pips apart instead of 10.
It breathes with the market. That makes total sense.
It uses the volatility to absorb the shock.
And I saw a feature called the correlated limiter. It talks about silver.
This is a brilliant safety feature. I wish more bots had this. Gold and silver usually move together.
Highly correlated.
Right. So if you're already betting big on silver with another bot, you don't want to double your risk by also betting on gold. Because if gold crashes...
Silver probably crashes too.
Exactly. So before it opens a trade, it scans the account and asks, are we already exposed in a correlated assets? If yes, it blocks the new trade. It stops you from putting all your eggs in one basket.
Smart. Okay, speaking of specialized assets, the Aurum Yen Vector, tailored for JPY pairs. What makes the Japanese yen so special it needs its own bot?
The yen is famous or infamous for trending endlessly. When the yen starts moving, it doesn't look back. A standard grid bot gets slaughtered.
Because it keeps waiting for a pullback that never comes.
Never comes. So the yen vector uses what it calls an AI volatility engine.
Okay, the manual has a function get I volatility state.
Whoa.
What's that actually doing?
It's comparing current volatility to long-term historical averages. It's trying to figure out, is this normal movement or is this a black swan event?
And it has a red light feature based on this.
Yes, this is crucial. If that volatility score hits a level defined as vol extreme, the bot just stops, blocks all trading. It basically says, the market's irrational, I'm sitting out.
And if it's just vol exich?
It stops expanding the grid. It manages what it has, but refuses to add new risk.
It knows when to sit on its hands.
Which is the hardest thing for a human trader to do. And it also uses a daily stochastic to check the macro trend. It refuses to swim upstream.
Incredible. So we've covered the specialists. Let's bring it all together with the generalist, the K2 AI v3.0,
Right.
and the boss that oversees everything.
Right.
The K2 AI seems like the evolution of the K2 Pro we started with.
It is the evolution. It takes that sniper logic and adds multi-time frame confirmation.
So it's getting a second opinion.
Exactly. The K2 Pro looked at the current chart. The K2 AI checks the current chart and a higher time frame, like the 4-hour. Both have to agree.
So if the 5-minute chart says buy, but the 4-hour chart says sell.
It doesn't trade. It avoids those false signals you get in the lower time frame noise.
That's a good filter. But the real game changer in the K2 AI manual looked like the dynamic lot sizing. I think we need to unpack the math here because this is so important for risk management.
This is the holy grail of position sizing.
The formula is account equity risk percent SL distance.
Right. Most beginners trade fixed lots. They buy 0.1 lots every time. But that's wrong.
Why?
Because a 0.1 lot trade with a 10-pip stop loss is a tiny risk. But a 0.1 lot trade with a 100-pip stop loss is 10 times the risk.
You're risking 10 times more money just because the chart pattern is bigger.
Yes. So this formula works backward. It asks, how much money do I want to risk? Let's say 1% of your $10,000 account, so $100.
Okay.
If the stop loss is wide, say 50 pips, the bot automatically shrinks the lot size. If the stop is tight, it increases the lot size.
So you're always risking the same dollar amount.
Always. It standardizes the pain. You never take a surprise hit that wipes out a week of games.
And it also knows what it's trading. I saw a mention of pips versus points.
Yes. Asset intelligence. It knows if it's on a gold chart versus a Forex chart and switches its internal math from SLFX to SLGOLD. It prevents that disaster where your math is just wrong for the asset.
Okay, so we've talked about all these individual bots, but in the documentation, they all seem to report to a higher power,
They do.
the portfolio governor.
This is the ultimate safety net. It's the boss. The governor doesn't care about indicators. It only cares about one thing, the account equity.
The bottom line, what are the mechanisms it uses?
3 big ones. First, the daily loss limit. Daily loss limit percent. If the account is down, say, 2% for the day, the governor shuts everything off.
It stops the bleeding, prevents revenge trade.
Exactly. It physically prevents it. Second is max total lots. It caps the total leverage used across all the bots combined.
Okay.
So if 3 bots all want to open trades at once, the governor might say, nope, not enough margin, and deny the request.
And the third one, the equity stop.
That sounded a bit scary. That's the nuclear option. The function is literally close all trades. If your total equity drops below a certain danger point, it immediately closes every single open position.
It realizes the ship is sinking.
It realizes that survival is more important than hoping for a turnaround. It liquidates everything to save what's left. It's painful, but it's better than a total washout.
It's ruthless, but I guess it has to be.
It has to be. In automation, emotion is the enemy. The governor enforces discipline when you might be too frozen to act.
So looking back at this stack of manuals, we've gone from the disciplined sniper to the self-aware learner to the specialists, and finally the overarching governor. It's quite a progression.
It is. And if we synthesize this, the so what here is really interesting. The sophistication in these RM bots isn't just in the entry signal. Everyone obsesses over when do I buy. But looking at this code, the real genius is in the management.
The risk governors, the volatility filters, the adaptation.
Exactly. The manuals reveal that automated doesn't mean unsupervised. These tools are designed to manage chaos, but they rely on you setting those strict parameters. They protect you from yourself.
It really changes how you view this stuff. It's less about a magic money printer.
And more about a rigorous, tireless risk manager that works while you sleep.
Ideally, yeah. It's about outsourcing the discipline, not just the execution.
Before we wrap up, I want to leave our listeners with a thought. We talked about the Eurostrike Pro 5 earlier.
The one that learns.
Right, the one that stores its personality in those global variables on your hard drive.
The adaptive memory, yeah.
So if that bot learns from its specific wins and losses, and since every broker has slightly different data feeds, different spreads, does that mean 2 people running the exact same bot starting on the same day could end up with 2 completely different trading personalities after a year?
That is a profound question. You're right. If the data feeds differ even slightly, one bot might take a trade the other misses. One might win, the other stops out. So their learning paths diverge.
They diverge. The bot isn't static anymore. It's evolving based on its unique experience. You could technically have nature versus nurture applied to software code.
That is a wild thought to end on. Your bot is becoming unique to you. Thanks for joining us on this deep dive into the Aurum series.
My pleasure.
And thank you for listening. We'll catch you on the next deep dive.